So everyone keeps asking the same question. What are the mortgage rates going to do in 2026? And to answer that question, I've invited a local lending expert, Shannon Thome, to help us answer and understand kind of what the mortgage rates are going to do in 2026. So, hi, Shannon. Thanks for joining me.
Hi, Michelle. Thank you for having me. So I'll tell you a little bit about myself. My name
Please
is
do.
Shannon Thome. My name is Shannon Thome. I'm a mortgage lender at Central Bank. Been in the business for 26 years, so I've definitely rode the highs and lows of what the market's done over the past 26 years. Been married for 30 years, mother of two children. My son is actually my assistant, training him, so it's been a lot of fun.
Excellent. I love that. It's a family business.
Yep, that's yes. Yep.
So, let's start with the biggest question everyone wants answered. Where do you think the mortgage rates are going to be headed in 2026?
So at the beginning of 2026, we started to see a downhill slide on rates so that we were seeing improvements. So we went from basically 6.5 all the way down to 5.5. It was absolutely beautiful. Then this war started at the end of February, and it has made rates tick back up. So to answer that question, all market experts believe we're going to see rates remain pretty sticky, but really hover around that 6% range. So we're going to see anywhere from 5.75 to 6.25. That could all take a dramatic shift depending on what happens overseas with this Iran war. So if we cease fire next week, we're going to see rates come down. If they continue the course, we're going to continue to hover with slight increases, tickling 6.25. But if I had a crystal ball, I would say by the end of this year, we're going to see the high fives, 5.5, 5.75.
Excellent. What would you say to buyers who are trying to decide whether they should buy now or wait?
I'm biased in my advice, and I say buy now. And here's why, because even if you think rates are a little bit high, so we'll call it 6%, the $300,000 house you buy at 6%, if you wait until rates are 5.5, that $300,000 house now becomes 320. So you might as well grab it now and then refinance in a year or whenever when rates hit that spot that makes it make sense for you to do a refinance. And that way you're building that $20,000 equity instead of waiting for that rate to come down and then the seller ups the price because now demand is greater. That's the advice I give people that are on that kind of fence. Do I do it now? I say yes, and here's why.
Yeah. And I agree with you, Shannon. I find that as well. The buyers are asking me, excuse me, should I wait? Should I, wait for the rates to come down, wait for the home prices to come down? And I show them the data, from month to month, and home prices are going up and competition is going up.
And
So,
I agree. And in your market, quick question is, I'm finding actually we're seeing a lot more price cuts in homes. So I think now is a really great time. Over the past year, I've probably seen more price decreases than I have in years past since, the tick up of the market when, after COVID rates or mortgage prices, real estate prices had just soared. So
right.
I feel like we're seeing a level up a little bit. Would you agree or disagree with that?
Well, I guess I would say it depends on the price range.
Sure.
Those you know, 2 to 350, 200,000 to 350 is a pretty popular price range, and so
I
those
agree.
tend to sell pretty quickly. If you're going, to the 500 to the 700s and up, they stay on the market a little bit longer, and sometimes sellers do have to decrease
Yeah.
prices um, just to, bring in more activity.
Yeah.
So,
I just noticed it a little bit, and I'm not as entrenched in that world as you are. It's just
mhm,
something I've noticed from afar, if that
yeah.
makes sense.
Okay, and we've been talking about this that, a lot of buyers are just focused on interest rates.
Yeah.
So, how much difference does even a 0.5% rate change actually make in a monthly payment?
So it depends obviously on the price point. The lower the loan amount, the less dramatic it will be. So let's just use an average $300,000 purchase price, putting 5% down. So if your loan amount's 285,000, principal and interest on at 6% on a 30-year fixed rate is 1709. Principal and interest, if you that interest rate goes down to 5.5, is 1603. So that difference in the payment, so it's about $90 roughly. So maybe
Hmm.
it was 16, it was maybe 1615 is what it was. I'm sorry.
Okay.
So it's about a $90 difference in the payment. So, if the house checks the boxes, definitely don't get hung up on not moving forward because that swing in the interest rate, because we just don't know if it's going to get down to 5.5. I'm optimistic that it will, but there's no guarantee that it will.
Yeah. So, what loan programs or strategies are helping the buyers right now?
So the cookie cutter loan programs that most buyers are going to be familiar with are conventional and FHA. So conventional is typically a little bit stronger of a program when sellers are looking at accepting offers because they're not as stringent on the appraisal, the appraisers. So, but they're still a really great program. FHA is as well as conventional. So some of the tools that we can use for a buyer to win are to be real mindful of the closing costs, the concessions that they're asking for, and as well as to build in if they're wanting to maximize a budget. You can build in with the seller by some negotiations, like doing rate buy downs, just to get everybody to that sweet spot to make it beneficial for all parties involved. Yeah.
Oh, I love this question. So, this is one of my favorites. What's the biggest mistake that you're seeing buyers make right now?
Number one, trust your instincts. I think you have shown enough buyers homes where they know when it's the one. Okay. So if you're going to a home and you're not feeling it, probably not the one. So don't do it just to do it. Number two, don't wait for the rate. So I love the saying, you can date the rate, you can marry the house and date the rate. You can
Exactly.
always refinance when rates come down. And we would hate for you to miss out on some building equity in the while that waiting is going on. If you're in a situation that you're paying rent, you're buying someone else a house. So you might as well build your own equity. So those are probably two of the biggest that I see.
Okay.
And the other thing is someone needs closing cost concessions. Once you've established a seller's bottom dollar, don't lose out on the deal by not building it on top of a list price. So that's really, if you need those concessions, let's make it beneficial for the seller too and build it on top of their list price. Don't
Yeah.
go down and try to
Yeah.
get them to pay 5,000 in closing costs and lower their price $10,000 in doing so. So we all need to find that sweet spot.
Yeah. Yeah. For sellers that are watching this, how do interest rates affect buyer demand for their home?
So as rates go up, those payments go up. So it lowers where the buyers are comfortable purchasing. So if you set your parameters at, I don't want my house payment going over $2,500, period, and then the rates go up a whole point, let's be dramatic, they go from 6 to 7, that right away lowers them from a 325 purchase price to a 300 purchase price. So we all have to work in this together. I understand, every seller's got a different demand as well, but
Yes.
finding that sweet spot is the art of that negotiation with both the listing agent and the selling agent. So I would say that sellers need to be real mindful of what the interest rate markets are doing. Typically, they're going to become a buyer when they sell, but
Right.
understanding as they're selling, it's going to affect their buyer pool as rates go up or even down. So as rates go down and they're being mindful of that, now their buying pool's opened up a little bit, which,
Right.
so it can go either way. So just
Right.
stay on top of the market, be mindful of what it's doing because it is going to impact your buyer demographic.
Exactly. If someone's thinking about buying later this year, what should they be doing right now to prepare?
I recommend they interview a couple of different lenders. Obviously, I would love to be on that list. Let's take a look at your credit, make sure nothing crazy has happened. I've seen, someone's identity was stolen and they didn't even know it. And so then when we pulled credit, they were able to go and do all the things they needed to remedy those situations so that we could get them to the good so that they could purchase 4 months later. So there,
Wow.
it doesn't, myth, having your credit checked is about 1 point off of your score. Number two, you have up to 14 days to have lenders shop your credit in your application to make sure that you're working with somebody that aligns with your basic needs.
Hmm.
And so don't be concerned about shopping for that.
Right.
So start now, look at the big picture. Let's figure out your establishing your buying power. And then even if you're looking again in 6 months, your credit report's good for 4 months. So worst case scenario, we would just have to update the report. But now you have the education. And as long as you just keep doing what you're doing, your score will remain the same. So the basics when it comes to credit, keep your balances low on credit obligation and payments made on time. It really truly is that simple.
Yeah. And when, buyers contact me and, they want to work with me to help them purchase a home, the first thing I do is give them a list of um, lenders that I've worked with the past that have really done excellent job for my clients and go sit down with them, meet them face to face
Yeah,
or
yeah,
phone call, just so that you can get to know that person.
I
And
agree.
how can you help me? What are my options? Educate me. Because that's
Yep,
one thing that buyers aren't, you can't really learn local data on the internet. I mean,
I
unless
agree.
you're looking at, just the Des Moines market. Um, but I always recommend to my buyers to sit down with lenders or have a phone call and, at least two or three. And then you'll know who you're comfortable to
I
work
agree.
with, and you'll
Yeah,
know
I agree.
who's got the expertise that you want. So,
And I will say Michelle has such outstanding quality list of lenders on her recommended list. And then always remember the devil is in the detail. So whatever you're reading online and
yes,
doing some quick internet research may not even apply to you. Say, Michelle, just something to always be really mindful of and
yeah.
working with someone that's transparent and accessible.
Okay. All right, Shannon. So now I'm going to do a lightning round of question and answers. First one, higher, lower, or stable by the year end rates?
Lower. I foresee 5.625 by December of 2026.
Okay.
30-year fixed 5.625.
Awesome. I got to write that down. Okay. Second, best advice for first-time home buyers.
Do some research to work with lenders that specialize in down payment assistance programs as well as rockstar communication. You don't know what you don't know. So having someone that can answer the questions, give you the education that you need, as well as the method, explaining the method to the madness, that'll go so far with a first time home buyer because then they're a little bit more empowered to know that they're making the decisions that are best for them.
Love it. Love it. Most understood thing about rates.
The most misunderstood things about rates is that it is a one size fits all. On a conventional loan, your credit score will impact your interest rate. Your loan to value will impact your interest rate. It will also impact your private mortgage insurance, which is required unless you're putting 20% down. It can also impact if you've had derogatories on your credit. Your debt to income ratio can affect your interest rate. So these are some, is that your income can, because you could qualify for a home ready program versus non-home ready. So there's a lot of different things that can impact that interest rate. So that is probably what is the most misunderstood. If someone's doing a blanket quote or even an online, Oh, their rate was, 6%. Yes, but that was at a 780 credit score, 25% down. So it's those things are that's the most misunderstood thing with interest rates. So if someone calls me and says, "What's your rate?" I say, "I need to ask you 5 questions before I will answer that." Because I'm only doing my due diligence to be truthful with them out the gate instead of a little bait and switch down the road.
Yeah, yeah. A lot of people don't realize when they look at a rate online, they don't read the fine print on
Agreed. Agreed.
what is actually entailed in that rate.
Correct.
Okay, I love this question. Coffee or energy drinks during rate week?
Coffee, and I drink it black. So I am a real coffee drinker. And I love coffee. I would drink it all day long if I can. I love the smell. I love the taste. I love it all. It's
Okay.
so good.
Me too. Me too.
It's
I
so
love
good.
coffee, black as well. So, all
We're
right.
real. We're real. We're the real ones,
We're,
Michelle.
yeah, we are. We are. No foo-foo drinks for us.
No, no.
Hey, Shannon, you so much for your time and your expertise. I think you've provided a lot of wonderful information that I think is going to help a lot of buyers and sellers.
And I would be happy to assist anybody and answer any questions that you have as you are starting your home buying journey, as will Michelle.
Perfect. And I will include all your information down below in the description, so they'll be able to contact you.
Thank you so much. You
Okay,
guys all
thanks, Shannon.
have a wonderful weekend.
You too.
All
Bye.
right.